Welcome back everyone, and in this video, we're going over the new stock that I just bought that I believe can double or triple over the next few years. This is a company that operates in a very fast growing industry that I'm very bullish on down the road. Overall, this company is in a growing industry, their retail distribution is expanding at a massive rate, and they continue to grow and innovate with their product line. I think they're doing a lot of things right, they have a strong brand, and I think this company over the long term can be very successful. And this stock that we're going to go over today is called Tattooed Chef. So this is a plant-based frozen food company that is growing at an insane rate quarter over quarter. They operate within the healthy food space and they have frozen options in both breakfast, lunch, dinner, and even dessert varieties. They have a huge product line that continues to expand. They're diversifying into different markets and their retail distribution chain is growing at an insane rate. And in this video today, we're going to go over my bullish thesis on Tattooed Chef, take a look at their most recent Investor Day presentation, and go over why I bought into this company. So I started my position in Tattooed Chef in my high risk portfolio. This currently has a value at $1,350 and is up close to 10% in the first 2 weeks of trading. If we take a look, I bought 10 shares of this company at around $22.39, and I'm already up 10% over the short term. Tattooed Chef currently trades right now at around $24 per share. And I bought this in my high risk portfolio because I still believe there's a lot of risk associated with this company. Although I am bullish and do think it will succeed, you can see just from the first few months of trading on the market, share price is extremely volatile, a lot of ups and downs, and this is still a ton of risk associated with this type of company. This, of course, my high risk portfolio is separate from my main dividend growth portfolio, which currently has a value at close to $78,000. If we take a look at ticker TTCF, we're going to go over this company in depth, and I'm going to share with you my reason why I bought it. In the first place I actually saw this stock was in other YouTube videos. Some bigger finance channels such as Financial Education and My Financial Friend, those were the people who actually put me onto this company. They all did their research, they showed their perspective on the business, and now I did the same. I went into their financial presentation, I took a look at their financial numbers and their future growth expectations, and I thought for my personal investment philosophy in this high risk portfolio, this would be a nice addition. So definitely take a look at those two bigger channels if you want to get their thoughts. They both bought in as well, and I think this is a company that can really succeed. If you're new to the channel, everyone, I am the Gen Z Investor, and every single day we talk about the stock market, we go over different stocks you can buy and sell, and discuss any major market news and headlines. I also discuss all the stocks that I own in my personal portfolio, such as my larger dividend growth portfolio of assets that provides me with monthly passive income, and of course my new high risk portfolio, which I created about 2 weeks ago to invest in some SPACs and some higher risk companies that have the potential to double, triple, or 5x over the next few years. And of course that is what we're focusing on today with the new holding of Tattooed Chef, ticker TTCF. So now we're going to take a look at their investor presentation, and I'm going to share the reasons that attracted me to this company and why I believe they can continue to grow over the long term. So we're going to start off by taking a quick look at the company history. They began operations back in 2009 and did around $2.1 million of total sales. You can see the company continued to grow year over year, but back in 2017, they rebranded and became Tattooed Chef. So now in 2020, they've done over $148 million of top line sales, and their 5-year CAGR is at 63%, which is absolutely incredible. And in 2020, they completed their merger and became a public company with over 38 branded SKUs in their product line. And Tattooed Chef has a huge addressable market within the United States. The US frozen retail sales in 2019 came in at over $55 billion. That allows them a huge market to attack. So right now, currently with their product line of breakfast, lunch, and dinner options, they have around $33.9 billion of market opportunity. They're now expanding their product line to include desserts, which will open up another $12.6 billion of overall market to disrupt over the next few years. So you can see in the frozen food section, over the next 1 to 2 years, they will be competing in a majority of that market. And with the new trends changing and millennials and Gen Zs providing and actually preferring the convenience of healthy frozen food, you can see this is going to lead to mass expansion for the business over the long term. These younger generations don't want to take the time to spend hours cooking home-cooked meals each and every day, especially when there are healthy alternatives they can buy at a cheap price and throw in the microwave or in the oven and be prepared very quickly. So I think this is a nice addressable market with huge size, and I think their nice branding and brand loyalty that they've already seen is going to allow them to penetrate this traditional market. So some key points on why this company expects to continue to exceed is that they are a leading disruptor in the plant-based food industry. They continue to innovate. They have diverse product line and a portfolio of products that span multiple different regions and categories. They're vertically integrated. They have exceptional growth, and they have a positive global impact. And one thing I want to point out, of course, they do have a beautiful logo. It's nice and edgy. It's clean, and I think it is very attractive to the eye. And their products in stores are very appealing. And one thing I really like about the company is it says, made from plants, not from science. So right now, we are living in an age where people care more than ever about what they put in their body. And being plant-based is a huge driver of future growth. And a lot of traditional businesses are trying to get some more plant-based options in their product line. So being a company completely focused on clean, ethically, and reasonably sourced products that are fully plant-based, I think really helps them with a huge growing market year over year. Some highlights of the business we're going to take a look at now show a little bit more of the financial side. Revenue growth from 2018 to 2021 expected will show a 68% CAGR. Established brand is growing 640% year over year. And what I want to point out is they are achieving this with no investment in marketing or brand. Their financial resources, they have around $90+ million in cash to allow them for strategic mergers and acquisitions and to reinvest back in the business. And of course, they are vertically integrated. They have a 200,000 square feet of manufacturing, which has actually doubled in 2020, and they have the capacity to double again in 2021. And that's one of the big issues with smaller companies, especially in the food space, is their ability to mass and increase production. Because if they get a large product order from some leading distribution companies like Costco, Walmart, Target, whatever the major brands are, they need to be able to fulfill those at a very fast rate. So the fact that this company has the capacity to double once again really assures me that they will be able to succeed once their product takes off. And of course, Tattooed Chef has significant opportunity for growth, of course. So this is them. They have new platforms. They're going to have 200+ SKUs and product expansion. And of course, that allows them to grow internationally, get off the frozen section and into normal traditional aisles, have different food services, licensing their products and their services, and even hit convenience stores. So today the company sits at $148 million in 2020. Overall, they want to expand it within aisle space to $300 million by 2022. And with new aisles and channels, they expect to hit a $500 million of top line revenue in 2023. So if this company can do that, I think they will expand at a massive rate, and we will see their share price double or triple more, I think even higher. I think if they can achieve this $500 million of top line revenue in the next 3 years, we can see this company set at over $100 per share. They have a very strong leadership team, and this is a company that overall is growing at a massive rate, and their leadership comes from some major businesses. So of course, their CEO is one of the founders and comes directly from Tattooed Chef, and some of their other board members have some great experience with some of the largest brands in the world. So now we're going to take a look at some future growth expectations and the actual product line of the business. So some of their different product options, of course, are single-serve bowls. They have smoothies, vegetable blends, meat alternatives, and plant-powered pizzas. So they're just some of the different types of styles of products they own, and we're going to take a look now at how fast they've been growing their product line. Year over year, they continue to grow. They understand that they will have some products that are their key revenue drivers, but to be a fully established brand, they need to have more than 5 products. They need to be nicely diversified to give people different options in different markets where different trends are going over. So if we take a look at 2017, they had 2 main SKUs. 2018, they had around 8 to 10 SKUs. 2019, that again expanded. Now to 2020, they had 38 different SKUs. And in 2021, we're expecting 62 SKUs on the market. You can see their currently existing SKUs plus all the future ones they plan to release over the next year. And I think this amount of SKUs at that 62 to 100 range will give them the variety and the options to hit almost any retailer across the United States. Now, if we take a look at some of their growth expectations, right now, a new driving factor for their business is actually their e-commerce platform. So if we take a look, their site launched earlier this year. Only it's been only operational for less than 2 months, and that's their next step in evolution. This is their number 1 SKU based on revenue from their website, and I love the name. It's the Hangover Bundle. It's the food that you want to eat after you're hungover to recover. And I think that right away is very, very eye-catching. And I think for the younger generation, that type of bundle is very attractive. And their email list growth has accelerated up over 250%. Now, if we take a look at how they're expanding. So this is, of course, is a retail product. They are going to do direct to consumer. They are going to get sales that way, which will have higher margins. But overall, they want to be in the traditional retailers. So this is their after merger announcement. You can see all the different retailers they're in across the United States. And one thing I want to point out is they're not only in some smaller brands. They are in some of the major players like Target, Costco, and even Walmart. So this company overall continues to grow. And within the last 90 days, look at all the new players and the new national retailers they are getting into. 7-Eleven, Whole Foods, Target, Kroger, Safeway, Publix. Like, this is ridiculous, the fact that they are entering into all these new retailers in the past 2 months. That just makes me extremely bullish because obviously they're not going to be nationwide in all these retailers yet. But if they can succeed in a few of these and actually get national distribution, it will set the brand on fire. And right now, the company is already distributed across the entire United States, even though they are just getting into these retailers as of the last 60 days. So if we take a look, this is what really drives me and really allowed me to attract to this type of brand. I'm not really too attractive to traditional retail. Retail, I do think, is slowly dying out, and it does scare me that this is a frozen product in traditional retail. But with this growth, it does make it attractive for me personally. So right now, their branded points of distribution was up 155% versus 2019. And in 2020, they're in close to 2,700 Walmarts, 600 Sam's Clubs, 543 Costco's, 436 Targets. That's incredible for a young brand that's really just hit the public market from their merger. To be in this many stores and have over 23,000 points of distribution is insane. And their objective for 2021 is to be in 10,000 stores with 65,000 points of distribution within the United States. And this map, I think, is only going to get larger and larger as time goes on. And if we take a look over the latest 13 weeks of 2019 and 2020, Walmart, one of the largest retailers in the world, one of the brands you have to get into, and if you want to dominate in the retail space, they've seen some incredible growth. So in 13 weeks prior to their investor presentation back in 2019, they had 5 SKUs in Walmart, total points of distribution at just over 2,100, and were in 467 stores. But now in 2020, for the 13 weeks before their investor day presentation, they have 11 SKUs in Walmart, up 120%. They have over 17,700 total points of distribution, up 720%. And now the maximum store count is at over 2,600. And all 5 SKUs now distributed in more stores, and they added 6 new additional ones to the Walmart mix. So Walmart doesn't reorder unless you sell. That's the thing about Walmart. They are ruthless. They only care about product sales, product volume, and which product people come in and take off the shelves. So if Tattooed Chef was not selling out very well, Walmart would never have ordered more. They would have never increased their SKUs, because one thing I want to point out is the frozen food space is very, very difficult to penetrate, because if you're a Walmart, your frozen food section is full. So if a new company like Tattooed Chef wants to enter into those aisles, Walmart has to physically remove another company from that shelf space. So it's not like they can just add you in. The frozen food aisles are already compact because of the necessity of the freezers. So to get into that space and to be within eye level of different consumers as they walk down the aisle, Walmart's gonna have to physically remove another product. So they don't do that unless your product is selling. So the fact that they expanded the potential SKUs in their Walmart locations only reassures me that this product is actually selling out very well in in-person retail. So now we're actually gonna take a look at the financial performance and deep dive into the numbers. So year to date 2019, they provided top line revenue of 58 million. And for the same period in 2020, they had 108 million of top line revenue. So revenue grew 87% year over year, which is absolutely incredible. Gross profit was up 70%, and their current gross profit margin sits at 15.4%. Over time, I'm sure they will bump that up as they reach higher scale. They aren't producing a huge amount of product line right now, so once they get that volume numbers up, cost of per unit goes down, and they will be able to increase production and increase their gross product margin. Now, if we take a look at their revenue, 2020 expected to close out the year at 148 million, and estimated revenue for 2021 is going to come in at $220 million. That additional growth is going to come from existing SKUs, and $33 million of it is going to come from the new SKUs they plan to put on the market. And growth in revenue in 2021 is going to be 50+% year over year, driven to the expansion of new retailers taking on their products and the new product line hitting the shelves. And their guidance that I actually believe is somewhat attainable. Of course, for all young businesses, they really are highly optimistic, and a lot of things could go wrong. And that's why the risk is associated with this type of brands. So if we take a look at their 2021 guidance and beyond, for the year 2021, we're expecting revenue of $220 million. Then that goes up to $300 million. In 2023, $500 million. And then by 2026, we expect this to be a $1 billion per year revenue company. And you can see as they grow revenue, they have higher scale, their gross margin continues to grow at a nice rate. And once they are a $1 billion company, they're expecting 35% plus gross margin on their products. And their adjusted EBITDA is expected to hit 20+% as of sales over the long term in the next 5 to 6 years. So this is interesting projections. A lot of companies highly accelerate their growth, but if this company continue to grow, they are in a lot of retailers, they have a nice innovative product line. I actually don't think these are too optimistic. If they went from their current $220 million for 2021 and up to $1 billion in 2 to 3 years, then I would have given my personal opinion that it's a little bit far-fetched. But I really don't think they're that optimistic. Going from 220 to $1 billion over a 5-year span is a huge feat to achieve, but I actually think it's possible for this type of business. So this is my thoughts. It was kind of interesting future guidance. I don't mind it, but I am very attracted to this company. So I bought in just over $22 per share, and I do really plan to hold for the long term. And if we see another dip below $18 to $20 per share, I will be heavily buying in. I do like the company. Some other big YouTubers put in thousands and even hundreds of thousands of dollars into this stock. I'm not there yet because I am, that conservative dividend growth investor. But as of right now, I do like where they sit today. I do like how they're positioned in the growing industry, and I love their branding, and I think that's really going to help them sell over the long term. The new addition of their own personal website for e-commerce sales, I think is really going to accelerate, and I like the company. That's why I invested in. I like their future growth expectations. I think they can achieve what they're set out to do, and that's why I bought in. I might buy in more on a dip, and this was the newest company that I believe can actually double, 3x, or even 5x over the next few years. So thank you for watching. I'm the Gen Z Investor, and see you in tomorrow's video.